Hello investors, welcome to Simpli Stocks. Recently, the Delhi government released a draft EV policy under which they have proposed a ban on new petrol two-wheeler registrations from 2028. Along with this, the policy also proposed a 100% road tax waiver for EVs. If this gets approved, it will be a big trigger for Ather. Apart from this, due to the war, there were rumors that fuel shortage could happen. Therefore, during this period also, March, April months, companies like Ather, Bajaj and TVS all recorded very strong EV sales. Plus, if you notice, the market sentiment around Ather Energy's stock is also very upbeat right now. Even in such a weak market, it has outperformed and is currently trading at its all-time high. About 3 months ago, I had also made a detailed video on Ather for all of you where I discussed the interesting developments which were happening in this business. So seeing all these developments, today we will study Ather again and two other EV businesses, because at Simpli Stocks, we believe that several interesting triggers are playing out in the EV two-wheeler space. The EV two-wheeler market is currently going through a critical phase and penetration among mainstream customers is increasing. This segment will continue to remain focused going forward. That is my view. So in today's video, I'll talk about EV two-wheeler sector and discuss the three standout business models with you. With that, let's get started. Whenever a new product or technology is introduced, it usually follows this adoption curve. First come the innovators and early adopters, or basically the people who are the first to buy a product. These are slightly different breed of people who are willing to take risks and try out new things. At this stage, the market is very early and small because the number of risk takers is limited. Then a point comes when the technology moves beyond innovators and early adopters into the early majority and the mass adoption begins. This is the point when the technology becomes mainstream. That is, a large number of people start buying it, and from this point, sales increase rapidly. For example, when touchscreen phones were introduced, adoption was initially low, but later it picked up rapidly. Similarly, apps like Instagram, UPI, and Paytm also saw a major surge in usage. Right now, the same thing is happening with EV two-wheelers. About 1.5 years ago, there was an EV wave. Then some stress did come in between, but now the segment is booming again. The first wave of adoption was driven by subsidies, but now subsidies have reduced significantly or they have been completely removed. Now the demand that is coming is real, genuine, and that is also at a mass scale. The market is basically moving out of early stages and becoming more mature. Alongside this, another development is that players are finally getting the benefit of economies of scale. Earlier, as unit sales were low, so per unit production costs were high and companies were making losses. But now, with mass production, EV manufacturers have reduced costs and also improved their gross margins. Margins in EV two-wheelers are now approaching those of ICE vehicles. Research and development has also contributed to margin improvement. As EV volumes continue to grow from here and scale increases, operating leverage will improve and also electric two-wheeler sales will become profitable at EBITDA and then eventually at the PAT level as well. So that is the broader premise. So to summarize here once, the sector is at an important inflection point where sales are growing rapidly and profitability is also expected to improve significantly from here. So we can say that the fundamentals of the sector have become stronger than before. So the three businesses that I have studied are Ather Energy, Zelio E-mobility, and also Hero MotoCorp. Now let us quickly understand each of them in detail. And yes, as a standard disclaimer, none of these are buy or sell recommendations. Your focus should be on understanding the framework instead of just looking at them as recommendations or opportunities, and try to learn how to approach these businesses. Let us first have a look at Ather. This business is currently trending a lot. Over the last 1 to 1.5 years, Ather has been consistently gaining market share in the EV two-wheeler space. It has a strong presence in South India and is steadily expanding into other states too. They have continuously opened new experience centers or showrooms and also improved their profit margins. Ather has received a very strong response for its wide-body EV scooter Rista model. It has done very well. In the H2 of calendar year 25, the company sold 5 lakh plus vehicles, out of which 2 lakh were Resta models. And meanwhile, Ather's overall market share has also reached 18.4%, or let us say approx 19% or so. Now, I will not go into details a lot, but if you compare it with other players in the market, Ather has a strong product and charging infrastructure moat is also there. So these two things together, product and charging infrastructure moat, which we will see playing out over time. Ather is far ahead of its competitors in terms of technology integration, features, reliability, battery performance, and also the charging speed. Their sales over the past 3 months have also been strong. So their March quarter results are also expected to be good. In Q4, unit-wise, their sales have almost doubled compared to the last year because of the fuel shortage worries. And in Q3, that is in the months of October to December, they sold around 68,000 vehicles, you will see here, at an EBITDA margin of -3%. Now, their sales in January, February, and March months, that is Q4, have been 76,000 units. So I think they should turn EBITDA profitable in this quarter. And this margin improvement is the major trigger for Ather. They already have a high quality product and also very healthy sales growth. The company is moving from losses to profitability. That is the story playing out here. And 2 years ago, they were making losses even at the gross level. Now, finally, company is turning profitable. So here you need to understand the business scope, product mode, and the direction in which it is moving. Don't just reject it by saying that it is in losses right now. That is not the right way to judge this business. Now, a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Anyways, let us come back to our discussion. So Ather has all these product quality and other modes, plus it has two more positive triggers which are playing out. Its attach rate and spares business. Around 91% of customers also buy their software, Ather Stack Pro, along with the scooter. This will generate non-cyclical revenue in the long term, which we also call recurring revenue. So their software is quite popular among customers, if you ask anyone. Currently, about 40% of Ather's business is non-vehicle, out of which 10 to 11% comes from software subscription only, and then 2 to 3% is from service and spares. So this is also a strong point, because as vehicles get older, what happens is the revenue from service and spare parts keeps increasing for auto companies. Right now, Ather is new in the market. As this business will mature, spare sales should also go up. So that is the hypothesis. Or look at it another way, that though Ather is relatively new in the market, it is already generating 14 to 15% of its sales from these non-vehicle segments, similar to, let's say, other established auto companies. So for Ather, it should keep increasing from here. So there is a lot of potential in Ather. If you see from a long-term point of view on a 2 to 3 year time horizon, you will see a lot of value in this business, and you can study this business independently once. And some people might have an opinion that Ather may face tough competition from TVS and Bajaj, but I will say you should not worry too much about that. India is a massive market for two-wheelers with many different segments based on pricing and use cases. So therefore, many players can exist or coexist here simultaneously. Now, next, let us look at Zelio. Zelio operates in the sub 50,000 rupees category, selling low power, low speed EV scooters in tier 2, tier 3 markets of India. Zelio's proposition is that customers buy an EV as per their daily needs. Not everyone wants a 1.5 lakh rupees scooter, nor can everyone afford that expensive vehicle. For example, let's say someone just has a short daily commute to the office, or say a student who just needs a scooty to go to school and tuition. So Zelio has designed its portfolio around these use cases. They even have a range of scooters with a speed less than 25 km per hour, where even registrations are not required. Now, this low speed segment is largely unorganized. That is how you have to look at it. And there are many players across different states. And Zelio is emerging as a branded organized player in this category. Last year, about 19.6 lakh EVs were sold in India, out of which 8 lakh, mind you, were low speed. And there are industry reports saying that by 2034, 2035, 2 out of every 3 two-wheeler sold in India will be an EV. And there is a very high chance that every 1 out of this 2 EV which will be sold, it will be a low speed scooter. So you can see that this is a sufficiently large market or segment in itself. As for Zelio, it has started a new plant in February, which brings significant capacity. Additionally, they plan to launch a 3-wheeler plant too in the near future with a capacity of 24,000 units. Total, they will have a capacity for 1.7 lakh two-wheelers and then 24,000 three-wheelers. So this can also be an interesting EV play which you can check out. However, you also have to see that the management is relatively new. It is a family-run business. So that is a risk there which you have to monitor. Then another risk is that if low speed category indeed does well or takes off, there is a risk that large players like TVS and Bajaj may enter this segment too. And in Zelio's con call, there was a very healthy discussion around this by ace investor Mukul Agarwal around this only. And if you are interested, you should check out the con call. So this business is part of Mukulji's portfolio. He asked this question. The management's response was that auto sector depends heavily on servicing and spares. If Zelio is able to maintain good customer service and executes well, then competition can be tackled. That is nice to hear that management knows what is most important. Plus, for small companies, I will say success is largely dependent on execution. Competition is not a big risk for small players. So that is also very true, I believe. Let us see how their results come out for H2. Now, for FY25, if I give you a perspective, they had a target of selling around 60,000 units and generating 260 crore in sales. For this year, they are targeting 300 to 350 crore in revenue. Based on this, the forward PE becomes around 35. However, I also believe that they can report even better numbers, better sales volumes, especially since March and April have been very strong months for all EV two-wheeler players. So that is what we will have to see when results come out. But this is an interesting business. Now, lastly, third and final business, Hero MotoCorp. Let us quickly go through that as well, because I feel Hero is an optional bet in the EV space, which anyone can explore. Many people who are, let's say, not comfortable with Ather's valuation can consider Hero, as it has approximately 40% shareholding in Ather. If you look here on screener, Hero's market cap is 1 lakh crore rupees and the business is currently available at a PE of 20. Now here, if I do a basic sum of the parts valuation, I can value Hero's business at 80,000 crore rupees and the Ather holding at, let's say, 20,000 crore rupees after assuming that 50% holding discount. In such a case, the adjusted PE becomes just 15 for Hero. And if I give you a slight background, Hero has been losing market share to Bajaj and TVS for a long time. That is why they trade at such a low valuation compared to Bajaj and TVS. You will see Bajaj and TVS, they trade at higher valuation. But Hero's PE ratio is low because of market share loss. They used to dominate in the sub 125cc category, and that category has not performed well for a while. Rural demand has been weak, plus customers which were, let's say, at the higher end of the strata in the rural market, they shifted upward to higher cc bikes. But there are some positive triggers in Hero. For instance, their own EV model Vida is doing quite well. It has gained market share. Vida has also been developed as an integrated product around Ather's ethos. Apart from this, Hero has also worked on its premium portfolio and opening dedicated premium stores to attract that demand. So these are 2 to 3 pointers. Additionally, phases come when rural demand remains strong for several consecutive months, and surprisingly, Hero also reports good sales volumes during that period. At that time, this business can do well, I believe so. And then at the same time, Ather holding story will also play out. So all these things will come together. In such a scenario, the market can easily give Hero a P of, let's say, 30, 35. So based on all this, you can look at your entry and exit points in this business. And the monthly sales data, which I showed you and which is here again, is something that we track very closely every month for all auto companies in our Simpli Stocks community. And this is what active investing actually is. When you take calculated investment decisions based on industry reports, company reserves, and whatever data that is available. So if you want to become a smart, informed investor, you can consider joining our Simpli Stocks community. I have put the link to that community in the description below. However, before I end this video, I will also give you a heads up, or I'll say I will emphasize that in terms of growth and scope, Ather is definitely better bet. Hero might be more appealing to specifically those people who want to play, let's say, very cautiously. Because if your downside is protected here, also understand that your upside is also limited. So that is there. So these are the 3 interesting businesses that I currently like in the EV space. Further, if you are new to our channel, feel free to subscribe to Simpli Stocks, because when their results come, results of these stocks, I'll be covering them again for you on the channel. And yes, if you found this video helpful and if you did not like the video earlier, please make sure to hit the like button. Your support really motivates us to bring more such content for you more often. And if you have any doubts about these companies, feel free to ask them in the comments. I'll see you in the next video. Happy investing.